Hello, well, GM, everybody, and welcome to a banger show with Centaura. Look, we've got a bunch of great guest speakers with us today. We've got the team, we've got the founders, we've got Jesus, and we've got Anthony with us. What we'll do is to start off the show, I'm just going to ask for likes, retweets, and comments. Anything you can do to support this one as we get the audience cooking in here would be fantastic. And then we're going to do a deep dive on a bunch of things today, but really excited to get into this. The title of today's show, The Vault Revolution, Automation and Risk Management. So that's your little TLDR as to what we're going to talk about today. Before we do, I'd love to get an introduction of both speakers, just for anyone new coming onto the pod. Also, just because they may have only heard you on Spaces before, guys. So for putting faces to names is definitely worth doing as well. So Jesus, I'll throw the mic over to you first to introduce yourself, and then we'll get the mic over to Anthony, and then we'll get right into the conversation.
Great. Thank you for hosting us. My name is Jesus Rodriguez. I'm the co-founder and CTO, CPO of Centaura, computer scientist by trade. Had a background in deep tech, including Microsoft. Did a tenure at DRW, a couple of exits as an entrepreneur. Well, I guess now three. I have a background in AI. I teach Apply AI at Columbia. I started a company called Into the Blog in 2019 that became sort of the biggest institutional DeFi provider. That's how I met Anthony, and in 2025, we decided to merge his company Trident and Into the Blog to start Centaura with this idea of building a universal layer, universal platform for institutional DeFi.
I'll take it next. So, Anthony DeMartino, co-founder and CEO. My background is from trading, so I did over 20 years on Wall Street between UBS, Barclays, HSBC, spanning short-term interest rates, credit, the Fannie Freddie market during 2007 to 2012, European interest rates and credit during the Euro crisis, and then finished my career in Wall Street running emerging markets for Barclays and Latin America for HSBC. 2020 moved to Coinbase to build a DeFi and derivative trading. That's where I met Jesus, and I learned about the Into the Block product. Within a couple of weeks, we moved all of our DeFi allocations into the Block Smart Yields product because we realized what we were doing versus the speed and scale in which they were moving was not even close. So I am the CEO of the combined companies, but I was originally a client of Into the Block.
Look, absolutely fascinating stories on both sides, and we've done deep dives before. So anybody new to the show, go back, check the highlights, go back and find our previous shows. We've done really great breakdowns on founders. Hit the spaces as well if you want those deep dives. But today we're really here to talk about that risk management side. We're really here to talk about the Vault Revolution side, and that's why we've put everybody on the panel today. I think, look, before we dive into product side and what you guys are building, I think it's worth talking about anything trending in the space right now, anything that's captured attention in the space right now. And I think the Resolve protocol issue is definitely one worth pointing out. It's been all over the timeline. Basically, it was an exploit, $23 million lost. Not the first time we've seen DeFi exploits, not the first time we've seen millions lost in exploits. Feel for everybody involved, but this is not a new issue, and it's definitely not something that reflects the space in the best way. So I don't know if we want to go technical maybe first here, and then Anthony, I'd love your take on this as well. But Jesus, beforehand, give me your perspective here. What does this event reveal about the current state of risk management in DeFi?
So before we start, I think it's probably worth highlighting that Centaura was the from the big curators, the one that never had any exposure to Resolve. So we never approved the asset in any of our vaults. It didn't pass our risk due diligence, and therefore we didn't have any direct exposure. We did spend the weekend monitoring everything and making sure there wasn't any indirect ramifications into our positions, which There wasn't the exploit itself is a pretty highly sophisticated attack on a minting function. The protocol, from some perspective, it works as intended, so it wasn't a malfunction. But it sort of highlight how low level this exploit could go. In terms of the reflection on the space, Anthony is probably going to have a more in-depth opinion here. I think the bulk curation protocols acted as they should. It did show that there is the level again. Once again, they show the interdependency between assets and bolts and protocols, and not because one asset that isolate real isolation is really not there. Like the interdependencies in DeFi is a very constrained graph in that sense. And one of the things that Anthony likes to say, which is probably a good intro for him, is this shows once again that there is a difference between bulk curators and risk curators. One thing is selecting the composition of the vault and the assets for Geo, but a very different thing is having systematic, intelligent risk management and monitoring.
No, look, that's great context, and great to hear that Centaura weren't impacted anyway. It does make you ask the question, though, right? If Centaura haven't been impacted, and not just not impacted, but even from a second or third degree of separation, not impacted by any of the partners you work with. That sort of is painting a picture to me, with just from a retail perspective, that this was at least in some elements avoidable. Or at least in terms of there is a category of risk analysis that these guys didn't pass for certain groups. Why did they pass for others? 23 million is no small change. So yeah, this is a lot of big questions there. I'd love to get maybe the mic over to Anthony here to give us some color to that.
Sure. So there's tons of asset issuers and protocols who push us every day to add assets. So just saying that we didn't approve resolve, we didn't approve an asset doesn't come without consequences. That means we lose deals, we lose incentives. In some cases, we lose whole programs because we won't approve an asset. We had a really knockdown, drag out fight, unusual.
Oh, sorry, Anthony. The mic is crackling up quite aggressively at the minute.
Is that happening on my side?
I think it's the Wi-Fi or
Right.
it's something's breaking up.
Let me know if that's any better.
Much better.
Perfect. Yeah. So
Uh-oh.
choosing not to approve an asset.
I spoke too soon. It's broken up again. As soon as you get into a proper rhythm of sentences, it starts crackling. Trying to think how we solve for that. I'd maybe go back to the laptop, and in the meantime, me and Jesus will.
I can address it. Yeah, I think what Anthony was gonna say is the fact that we didn't approve resolve is not an isolated thing. The way we take asset selection extremely seriously, and there is an entire team process and tools that we use for evaluating what assets goes into those protocol vaults that is completely separated from the type of strategies that we run. So from that perspective, the risk team is always looking at new assets. These days they're spending a monumental amount of time on RWAs and evaluating sort of a new frontier assets. And this team it has a very unique combination of DeFi and traditional markets expertise, which it proven to be priceless in when it comes to analyze assets, because we tend to look, at least myself, at this asset from a very quantitative standpoint. But I think this guys will bring a macro picture that is very different. One thing that I will caveat before handing it back to Anthony is that, look, we as a principle in Centaura, we don't criticize or attack any of our competitors publicly. We have been in touch with those teams trying to be supportive. We think that the biggest impact here is what this means for ball curation in general. And we think the biggest competition here is this DeFi world versus traditional finance rather than the competition among ourselves. Like, I think this is a very, very small market still. So from that perspective, we hope that all these curators get past this issue soon enough and get back to competing with us. So.
Yeah, look, it's super commendable, and it's definitely too small of a pond to be like fighting each other over right now. And I entirely agree that the competition is not inside of crypto. It's Web 2, and it's the inefficiencies, the bureaucracy, and just the price discrepancy that you see when you go through traditional forms of banking at the moment or finance. I do still, as a retail participant though, and someone who wants to put my money in certain places, it still does give me a little bit of I don't know, like shivers. It gives me a little bit of a, oh, here's another protocol that I actually, I thought they were doing quite well. I thought that the risk was pretty decent, and then this thing happens, and I have to consider the fact that this will put off other users because it put off me, and maybe the solution is to just do Centaura. There's a reason you guys are managing so much of this risk at this point, but I appreciate the the thought process as well. I completely agree. It's not about competition here. Definitely want to see everyone made whole if we can, but yeah, these things have to be, they have to be put under the magnifying glass for a user perspective to get them back on board and to feel safe anywhere in DeFi. And if it is Centaura, that's good with me right now, in all honesty. But yeah, that's me as a speaker, not on behalf of Centaura. That's just my feelings about this as a retail investor and user. Anthony, I would love to throw the mic over to you. Let's get a little mic check off you, make sure you're coming through crystal clear, and then we'll go from there.
You guys hear me?
Yeah, I'm scared to jinx it, but it sounds good. It sounds good.
The only thing I was going to add was our risk team is completely independent from anything commercial.
Right.
So they have the last say. So we've never, and to be fair, if anyone from a protocol or a token issuer has met them, they're pretty prickly. They ask the questions that people don't want asked, and they go very deep. So they have no problem telling us to piss off as well with a commercial trade. So, and I think that separation is important.
Yes.
And that they're the first line of defense, right? Like they need to have complete autonomy.
Yeah, that's incredible. But tell me about what prickly means in layman's terms. What are these questions that they're asking that people don't want to answer?
So I'll give some examples. Without giving names, so we approved a kind of like Athena-like product.
Yes.
And we noticed that not all of their risk was on exchange. So they did bilateral derivatives. And we wouldn't approve them until we saw their ISDAs. So we knew what that, where the fixings were, where the fallbacks were, where the margin calls were to happen, because that's not visual on chain. And, they were able, they have to protect their counterparties, and it was redacted, but we needed to see that language. With others, we wanted to be able to, the others that are on chain, we wanted to see absolutely every portion of their risk on chain, and we create our own dashboards to consume that risk, and we constantly are pestering them. So risk management is not a one and done; it's a every block exercise.
Right. Yeah. Well, that makes sense, right? Because so is the management of that finance and the investment strategy. It's an evolving thing, and
There's one thing I did want to bring up on the exploit though. So
yeah.
Within, again, the feature, not a bug, but within Morpho for the curators, there's tools. And one of those tools is a bot that reallocates idle capital based on your parameters. So when that bot was allocating to the resolve pool, it was doing what it was intended to do, right? And the challenge with that is anything that's going to get exploited is going to benefit from this bot being unchecked. And the hours, and listen, in TradFi, the response was super quick. In DeFi, it was arguably slow to recognize the exploit to the bots constantly allocating, even though what people are trying to get. So I think it might be a decent segue into what we're here for is that, and this is a bit of a warning to the TradFi curators, right? As they come into the space, they have a big name brand. We have 37 people working on this across 5 disciplines, right? Most of the TradFi teams are 1 or 2 people.
Right.
So to be able to curate and risk management in real time, and yes, they have decades of experience doing this, but they don't have much experience in this space. And I think we are moving in a direction where DeFi is already extremely fast compared to TradFi. And as AI agents become a bigger part of the landscape, we're going to need to start moving at the speed of AI. Now, there's precedent for this in the TradFi world. So when I was a trader in 2000, anytime a client came in for a quote, whether it was 50 grand or 50 million or 5 billion, a human priced it, gave the quote, said done, and hedged the position, right? Now, you fast forward to like 2010, algorithms were pricing trades up to $1 billion, depending on the asset class. And you fast forward to like 2015, the sizes got even bigger, and they were auto hedging the positions. So basically, traders were, Wall Street trading staff has shrunk significantly since the advent, and just because they couldn't keep up with the speed, right? And the top 10 market makers in the TradFi world got displaced by pure technology companies and the likes of Jump and Citadel, because they built these algorithms to price and price tighter, price faster, and hedge better. And they're the top they dominate the banks as far as trade flow. And I feel like this correlate. So one, there's a lot less human interaction because you can't operate at that speed. So the traders are only left quoting large complex structures that you can't just auto quote at this point, but eventually we'll head in that direction. And I think, just as a segue into what we're about to talk about, that we're already there. And we automate all our vol curation and automate our risk management. And now it's time to embed AI to be able to move at that speed.
Wow. Okay. So how is it that Centaura are already there when, even on the traditional side, and especially not in DeFi, it doesn't seem like anyone else is remotely
Well, it's not
close.
it's not me. I can't take any credit for it. I'll give it to my here. Definitely not me.
You can take all the credit. It's yours. So look, since we started, every strategy that went into production, it has a level of systematic risk management based on traditional machine learning models in the across that stack, that pipeline that goes from identifying a strategy to putting it in production. We have been incorporating for the last 4 years more and more AI capabilities to the point that today is fairly AI centric. So a few weeks ago, we were talking to a client, and we actually show them how we discover strategies, how do we manage risk internally, not what you see in the product. And they looked at us and were like, okay, but you guys are crazy. Like, why wouldn't you show this to people? Like, I mean, this is amazing, right? Like, more people should know about this. So we have been more open. So what Anthony is alluding to is we are, a lot of those capabilities that you're seeing today are making it into the product. So the way we're relatively new to bulk curation in the sense of bulk curation in Morpho, Camino, Euler. We have been running DeFi strategies for 4 years, and then when we approached bulk curation, that was Anthony led that initiative. The one requirement we had in our engineering team is we wanted to put the same level of automation and rigor that we have for our institutional clients. So the way that we designable, simulate, automate the creation, systematically monitor the risk-based decision is all automated. we reacted to this hack on a Sunday, and most people, when it happened, were not even online, right? But all the signals were there. Now, I don't know if I'm gonna hijack this entire conversation, but the thesis that we're working towards post resolve is that, and Anthony and I are going to be publishing a lot of papers and content about this, is that we believe that bulk curation should be an agentic workflow. Like it should be done by agents and not humans. So from the point that it's too complex, so protocols like Morph and Oilers have hundreds of parameters that you need to configure. A lot of the risk that we saw on resolve on these assets is in the source code. So you need to get comfortable. So AI is good at doing that. Doesn't get scared by 100 parameters and thousands of lines of source code. So this is one thesis, right? Like we think it's too complex and should be agentic. But the second vector is if we actually believe that agents are going to be a key part of the economy, and we believe all the stuff that we're claiming in crypto, that crypto is a rails, the financial rails for AI, well, then AI agents are going to be consumers of this bot. So do you want an AI agent being the consumer and a human curator on the other side? The mismatch is impossible, right? So we're pushing extremely hard to have an entire AI bulk curation platform. And we're gonna be publishing a lot of details about how in the next few days, because we believe this is the future of bulk curation. It should be, and that we're not gonna flip a switch and you're gonna get a robot on the other side tomorrow, but it's gonna be supervised with humans in the loop and everything. But if today we feel that our the core principle of our bulk curation is automation and systematic risk management, the next phase is intelligence.
This is fascinating to hear. Like for people, in the AI world right now, they're probably, just nodding their heads at this conversation. We're already seeing like agents really take on a completely different model than even LLMs a couple of years ago did. The difference between ChatGPT 3.5, and just having this OpenAI large language model, which is what ChatGPT is, having a conversation with it and still being blown away at the time by the information it can get you and at the speed at which that information can be provided, in comparison today where you might have your own agents not only finding that information but being proactive with it, actually going and doing the action steps off the back of it as well, essentially full autonomy. And that's really open to realistically a retail audience at this point, or a more general consumer audience. So I understand from that perspective. For those less familiar, why is AI going to take over all of the risk and all of the process when it does come to this stuff? And maybe Anthony, do you want to have a crack at that first, and then we can get it back over to Jesus? But what's your perspective on this? And tell me about the relationship here between you and Jesus. Is Jesus coming to you, telling you about the technicals, and then you're distilling this from a CEO perspective? Tell me about that side.
I wish.
No, so on your first question, I don't know if, I think we're currently about 40% of our workflows are AI embedded. The goal is to get to about 80 by the end of the year in both strategies, risk management, and curation. I think the last 20 will take quite a long time.
Yeah.
Because we still have human safeguards, and there still has to be someone who's, at least at this point, who's rational and saying, especially things that haven't been seen before, but have seen things that are correlated to it. So I'll give you an example, and we'll go back to the resolve issue. Once the mint happened that was larger than the daily average, we got alerts. Right now, in a world of, if AI was running this and we had exposure to it, the agent would have seen the larger than expected mint, and it still wouldn't know why it happened. But the initial reaction would be to one, deallocate idle funds that are sitting already allocated to the asset, and and would be the first reaction function, and then a human can sit there and say, okay, should this have happened? Why did this happen? And should we take additional steps? So I think that's where we're heading towards by the end of the year. As far as how Jesus and I work to interact, I think because I've traded so many different markets and been through so many different crises, what he's trying to get from me, both on idea generation and on risk management, is like, how do you think about it? What is your framework? What is your structure? How do you look at different market dynamics? And he's basically is using it to train the agents. So, and we got into an argument, not argument, but it was a discussion with our teams where the first iteration of the agent was finding strategies, and I was finding strategies it wasn't finding. And Jesus got really upset and reallocated some time to it. And now I struggle to find anything it can't find. So it was really, and then we also use it on the risk side. It's identified things that we haven't looked at before. And some of them are just noise, but some of them have pushed us to go down a different path or looking at the risk in a different way. It's really second and third order effects. Like if this happens here, our clients don't have exposure, but what happens if our client deposit it into the pool that has exposure, right? And if those funds are somewhat gated, if it's a big percentage of their deployment, does that now gate other people from exiting their protocol, which is approved, right? So it's about going down the ripple effects very quickly. Because the thing in TradFi, those ripple effects happen over months. In DeFi, they happen over blocks. Does that make sense?
Absolutely, yeah. It's all about time. Realistically, if everybody is able to move liquidity with a click of a button, then your maneuverability and your response time has to be equally as fast to get out.
Well, the exploiter, it's kind of like a sports analogy where the offensive players know what the play is, but the defensive players still are somewhat have to take some time to read and react. We want our agent to work as fast as the exploiter.
And only an agent can do that. Is that essentially, there's no human, even you can't scale up a team to ever be able to do that without, a couple million people watching every single investment live. And even then that would be down to... How do you
train everybody with like my level of experience or Jesus' level of experience or even our chief risk officer's level of experience? You'd have to disseminate that level of experience and intuition to dozens of people.
Yes.
Like how do you even do that?
Yeah, it's just not possible, right? And one person falls asleep at the desk or one person blinks or loses attention.
I mean, one person going to the bathroom is the speed in which, tens of millions were allocated to that vault.
Yeah. From that standpoint, it's inevitable, right? And it's required yesterday, not even today. But Jesus, I know you wanted to come in there, so I'd love to hear your thoughts on that.
Yeah, when you look at the problem from first principles from the risk perspective, and then we can look at it from the complexity perspective. In traditional finance, risk in markets is absorbed by a lot of intermediaries, right? Broker dealers and other that introduce latency, but they serve as a risk mitigation layer. In DeFi, we got rid of all that, but what we did conceptually is that all that risk is in the protocol, in the code, in the parameter configuration now, which is the programmability of DeFi is amazing, and is why we're all working here. But what that means is that risk is very disseminated now, and it's at the same level of your financial logic. So you need to manage risk at that level, right? It's not just by putting yourself in the middle. You need to understand code, and you need to understand the risk parameters and all that. And that part we have been doing it for a while. What is being very clear to us now, after doing, again, we have been doing bulk curation for 4 or 5 months at a scale, so it's relatively new. The growth has been incredible, but it's fairly new. But doing this level of automation is like, look, it's a matter of time before mistakes keep happening. The protocols are too complex, and they should be, like, they're abstracting a huge, very, very complex workflows. So we need to put this in the hands of in platforms that can understand risk at that level, and those are AI agents. So on one side you have the risk management, which is, but on the other is the complexity. If you look at the top vaults in any of those protocols called Morph or Euler, for a given market condition, it's very likely that they're not optimal today. So how do I think about always having my optimal vault configuration for a given objective? So that problem is simply an optimization problem. You have an objective function that is risk, is risk mitigation, or is risk adjusted return, or is returns, and you have a series of parameters and assets, and you need to find the optimal configuration for that. That's a relatively simple problem to attack from the AI perspective. So we want to get to a world in which our bots are not only block by block safer, but they're optimal, right? And react to market conditions in the way Anthony does, right? Like he reads news from an analyst in Wall Street and extrapolate 3 possible consequences in DeFi. I want to have that level of intelligence in our agents.
How far away are we from that?
We are going to be showing again, if you think that we have been building the core pieces for 4 years and the really AI pieces for the last 2 years, I'm putting AI at the what Anthony said is a real example. We discover strategies today with AI, we discover risk with AI, like all that, and a ton of researchers and analysts on top of that. So we're gonna be showing the first iteration of this technology in weeks.
In
In weeks.
weeks.
On
Okay.
Friday. So.
Wow. Okay. Well, I'm really excited to look at that. But yeah, it's really helpful context to sort of see how far we need to zoom out here. And I honestly wasn't expecting weeks as an answer. You caught me off guard a little bit there. I was expecting months, if not maybe 12. Okay. Right. Let me reframe with that information in mind then. So we are getting to a point where complexity meets speed, and we have AI, or we're getting very quickly to a stage where AI can meet those two areas of friction within DeFi. And we say DeFi specifically because of the lack of middlemen that essentially, through that sort of time lag, have also been operating as a security layer, because there's multiple places and multiple checks that maybe don't need to happen, but for the fact that they do happen slows things down, and it means that vulnerability isn't as aggressive as it is in DeFi because of the speed. And therefore, that's why we need these AI solutions. Reverse engineering that question, does that mean that AI and this solution really puts DeFi on a map where maybe security has been a concern for traditional finance more and more now? At this point, essentially, what I'm thinking is AI is the silver bullet for DeFi to really start to see mass adoption, because the friction and the people that are in the middle of traditional finance, they've basically been using a couple of these as excuses. You know, look at the issue over there. Look at the, I don't know, look at the fact that we've seen a number of exploits here, there, and there, and it wouldn't happen with us. If we get AI to a place where it can react that quickly, it sounds like traditional finance would be too slow. Where right now that is basically, you know, it's a feature, not a bug. But I'd love to hear your thoughts on this.
Yeah, I think Dan. Okay,
Go
you
ahead.
go.
And let's go
So,
Anthony and then back over to Jesus.
so I think traditional finance is still struggling to understand smart contracts in general.
Yes.
Right. The challenge there is that banks take on significantly larger risks than vanilla smart contract risks in blue chip protocols, but they haven't been able to build a framework. They haven't been able to onboard the right people to build that framework, in which then they can allocate risk capital. So if you then take it from there to AI agents running on top of smart contracts, I think it's going to push it back even further. So we think that in an interim, and I know we've done other podcasts on this, but we really think that insurance is what is going to unlock the next wave of adoption, because expecting hundreds, if not thousands, of regulated institutions to move up this curve at this speed. Especially if they're not shooting for a point in the future and just trying to trail behind what's already been built, I think it just probably pushes adoption of TradFi further away, and the need for insurance further up the queue. But I didn't want to know what Jesus has to say.
Yeah, so from the AI perspective, there is no reason why DeFi shouldn't become intelligent before TradFi, right? Because it's programmable by definition, so embedding intelligent. Now, there is like a trillion friction points on this, including the fact that there was never developed, that we never developed traditional native AI technology for smart contracts. So the space is quite behind in that sense. But the fact that it's programmable by nature, it makes it a much easier fit to incorporate AI capabilities. Now, is that enough to make a switch from TradFi to DeFi? I don't think so. I think there are lower hanging fruits, but I don't know about hanging fruits, but lower roadblocks that we need to cross, and one of them being insurance, and there are many others that we need to tackle before in parallel to intelligence, right? All this primitive that if you make it programmable intelligent will provide a viable, let's say, alternative to traditional finance.
Is it fair to say that this is fairly cyclical in a solution? Because, if we now have what you have built as an AI security solution, risk management solution that you have a lot of faith in and is just consistently proving to basically honor that faith, that then becomes easier to cover through insurance, which then shows the quality that AI and the speed of DeFi and how those two things relate, and on goes the circle, right? The more time you guys specifically as Centaura spend in the space and basically take advantage of DeFi and its speed, and you have this AI risk analysis also there to prove that the way you move and the speed you move is safe. Therefore, that's easier to insure or take that risk, and so the cycle continues. Is that the end goal? Is it like a full pie solution?
I think every primitive in DeFi should be intelligent. Insurance being one of them, as you probably know, we are working on insurance too as part of Project Farlight. But yes, the fact if I have a bot in Morpho managed with AI agents and one that isn't, all other factors being equal, asset composition and things like that, I think the AI agentic one will be safer and easier to insure. But I think the insurance itself should be intelligent too. Again, to me, this is AI is eating software in every single category. So DeFi is not going to be the exception just because we wanted it to remain on a smart contract, a static, archaic stuff.
Anthony, would love to hear your thoughts on that too.
So I think Jesus and I and the team have done a great job of building Centaur's brand, especially around risk management. But I don't think we'll ever surpass the banks and institutions that have been around before cars were invented. So I think it's a lofty goal, but I don't think it's the goal at Centaura. I think what we're trying to build is, I've always thought that DeFi was going to get consumed by TradFi because the infrastructure is superior to what is in TradFi, but the money is significantly larger in TradFi than DeFi. So, and there's still this big trust component between buy side and sell side that I don't think technology is just going to replace. So, where I see ourselves in the future state is being the seller of this technology to the better brands, right? I think if you think that us and Steakhouse and Gauntlet are going to be able to compete with Fidelity in the long term, I think in the short term we will. I think in the long term, I think that business will head to zero. And I think being the technology layer for large institutions will make us a lot more money, and two, and that'll make our shareholders happy, but is really where the natural fit for this is to go.
That makes sense. And really humble, actually, in terms of that take. It's not always the case. A lot of people, when they choose DeFi, it's because they believe it's going to take over. But I also understand that thought process. Okay, let's take this back, or actually put it forward a little bit. Looking ahead, if what is happening right now, and we're at consensus here between Jesus and Anthony, and Jesus, I'll throw this at you first, and then I'd like to hear Anthony's take on this also. If we're at consensus that actually the way AI is being built into these systems for DeFi, because of the speed, is actually going to push traditional adoption or institutional adoption further away, not closer away, what timelines are we looking at here? For what does DeFi look like over the next couple of years, and how quickly does that gap then get closed?
Look, I spend a lot of my time in AI. Like, built a couple of companies in the space and teach this stuff. And the reason I hesitate to give timelines is because, in a somewhat sad way, the Web3 space is incredibly behind AI, but in every dimension, right? There is very little talent, like hardcore AI talent in Web3. There is very little compute, data, models, everything. And when we started on this Web3 AI thing, the first thing that we came up with is building all this meme coins and meme agents and all that. My God. So from that perspective, so if you tell me what should be a clear future, I believe every DeFi protocol should be intelligent. That you should have AMMs that react to market conditions instead of doing a very basic X plus Y equals K math. We should have lending protocols that adjust parameters dynamically, be based on everything, understanding news, understanding. Maybe we're gonna need to have protocols for agents if we do believe that agents are gonna be a participant. Like, I don't know if the lending protocol for agent is Avermorph or is something else that is built for that demographic. Now, do I feel that's a foregone conclusion and that this space is gonna be able to iterate at the speed of AI? I'm not sure. Like, AI is moving at a speed that I don't know. I didn't see the semiconductor revolution. I was a baby, but or wasn't even born. But in traditional tech, I never seen anything like this. OpenAI launched Sora the other day, and then they shut it down last week. So companies are being funded, acquire, or fail faster than any even try. Companies are hitting 100 million ARR within months, right? Companies are failing within months. So the space is shifting. So the techniques are evolving. The space is shifting at a massive speed. Is crypto going to be able to adapt to that quick enough? I don't know. If we were, we should be able to build these capabilities within a year or two. I mean, in a year or two, we don't know if we're going to have AGI.
True. Yeah, people are saying as close as 2027.
Yeah. So it could be. I mean, I don't subscribe to that just yet, but there is a non-trivial chance that it happens, right? And we're still, here trying to make bots intelligent. So
look, really, really interesting take. A little scary as a pro crypto guy. I think for me, a couple of things that you said during the show stand out. The fact that realistically, because this is a financial system built predominantly on code, seems like it will be easier to adopt by AI and be built by AI. Also, we keep hearing this idea that AI needs funds, it needs assets, it needs liquidity to really move at the speed it needs to move on. There's a lot of consensus in crypto that and even in the AI circuits, for those who are pro crypto, that it will be crypto that is used here as opposed to like any sort of traditional finance system. And I see that world. So yeah, that's definitely food for thought. This stuff is moving so quickly. Is it something that sounds like crypto, looks like crypto, but AI has built it in a way that's even more efficient, and therefore we think we're going to get there, but something new that we can't even fathom right now comes out and removes that best in product sort of scenario that people in crypto think it has right now. Really, really interesting stuff, and it's gonna take me more than this show to wrap my brain around all of this. Anthony, I'll throw the mic over to you next.
I think the progress from Wall Street, the asset allocators will move first, and then the banks will want to facilitate their flows. When I was working at a bank, we never did anything new unless a client asked for it, right? And I think if you look at what segment of Wall Street is making the most progress, it's the asset managers, right? They're looking to tokenize more and more funds. They're ones at the head of the tape. They're looking to become vault curators. So we're already starting to see the allocators move, and the banks will catch up. I guarantee you that what's very interesting difference between TradFi and DeFi is when someone figures out alpha in TradFi, specifically hedge funds, they tell nobody and they slap 2-year non-competes on everybody. Right. In crypto, we find a little bit of alpha and we run out and start screaming at it so we can get all our way. So I would, I would bet there's tons of hedge funds already using the cutting edge of AI and the way they look at the markets, but they're still forced to transact in the, 8 hours a day, 5 days a week, 200 days a year type of model. So they will be driving the banks who provide that liquidity towards them, or they'll find a different provider of those services, which a lot of fintechs and neobanks are trying to step into. So it'd be pretty interesting to see who stands at the end. I'd like to think that the best product wins, but at least in the US, the one who has the most political clout tends to win. So we'll see how that one evolves. But at the end of the day, for the millions and billions of users, it's all going to be abstracted away. Right, it's just going to be one touch this, one touch that, and with the security and the risk management to know that unless you purchase an asset that drops in price, the other forms of transmitting money and storing money will be safe. And I think that for billions of people, that'll just be in the background.
Anthony, is crypto the best product right now to you for this future?
Blockchain and smart contracts, yes. Crypto just means a lot of different things to a lot of different people.
Yeah, that was fair.
But yeah, for this use case, because TradFi is just ledgers.
Yeah.
Right, and they're digital ledgers. So this is an adoption to an upgrade of an existing. So this isn't that radical.
Yeah.
Right, the smart contract piece is a bit of an upgrade for sure. But the banks are not. They're not about being max efficient. They're about providing max value and keeping the lack of efficiency for themselves, right? That's the rent collector mindset. And that's why you're seeing all this back and forth on Genius and Clarity, right? The banks still want to continue to extract rents, regardless if it's on-chain or off-chain. And they're really struggling to see where their value sits in the old model. But, I can see where the value will sit in the future. They just need to get there.
Yeah, I think I read something recently that the fee has always been 2%, basically for the past century. Always been 2%. You're near enough, and obviously that's very dependent on the figures you're playing with. People have got much less than that, but as like a general rule, year to year, 2%. No matter the internet, no matter anything that has come to like improve efficiency and scale. So yeah, they're gonna still want that 2%. They're modeled off that, right?
Yeah, and that's actually a good point, because I think too many people who are handling funds directly or indirectly are charging very little, which in a more complex, more risk-taking environment doesn't make any sense to me.
Yeah.
And every time a curator tries to up fees, there's like this revolt. Mostly people who don't even use the protocols. Like they're just sitting there trolling.
Yeah.
So we charge fees. We believe we deserve those fees. We're not an NGO. We're not a non-for-profit. And this being at the cutting edge of technology and risk management means we have to pay a bunch of people and support a bunch of infrastructure for that to happen. So I think in general, if you're serious, you charge.
Yes.
Right. If you're for free, you're kind of the Temu brand of what we do.
That's a great soundbite. I've sometimes as a host, you know when to just close out a show, and if you're not taking that right cut, you're a Timu brand of what we do is probably that. Yeah, my spider senses are tingling on that one, guys. Well, look, what I will do is at least give you both an opportunity to give us any updates, any milestones, anything that you would like the audience to know. Obviously, they've tuned in for this show. Anything coming up soon that you wanted to talk about? Otherwise, as I said, we should probably end it there. But Anthony, do you want to go first, and then I'll get it over to Jesus?
No, I think we've given up enough of the alpha and timeline today, but I'll leave it to Jesus.
Yeah, I think to leave some people to leave the expectation, we have a fairly large product release mid-April when all these conferences end. So stay tuned for that, and you're gonna find out more about this intelligent bot in the next few days.
That was huge to end out the show. So, guys, please say you caught that. Please say you caught the whole hour. If you haven't, likes, retweets, and comments, whole thing's recorded. Go back and rewatch it. Heavily recommend. There was a lot to get through there and a lot of value in that hour. Thank you so much for tuning in. For everyone who already has, I know it's crypto event season. I'm here in ETHCC right now. If you can see the little French architecture behind me, and look, yeah, really excited to do future ones of these and see where you guys are, especially with these timelines that we talked about earlier on in the show. But yeah, thank you so much, and Anthony, Jesus, thank you for your time as always, and we'll catch you all on the next one.
Always a pleasure.
You.